Michael, there is such a lively debate about deflation versus hyperinflation, the risk of both. Where do you come down in that camp?
We think the disinflation that we're seeing continues. We don't think we get into outright deflation. And certainly we dismiss the hyperinflation outcome, at least for the near to medium term.
What do you say to those people, though, who point to things like metals prices or commodities prices, or see leading indicators of inflation perhaps in places like China? Is that stuff just irrelevant, or is it just outweighed by other factors that suggest to you we're still going to be in a disinflationary period for some time?
Right. So we saw rising commodity prices all throughout through most of 2009. And that never really fed through into core inflation. And I think what's more important here is the big declines in labor costs in terms of being a much more important input into business costs and thinking about core consumer prices.
But, okay, that's a very important point. But for how long can we expect those low labor costs to persist? U.S. employers, as we all know, have been milking as much productivity as they possibly can out of the workers that they've got. Sure, we have a 10% unemployment rate or something close to it, but aren't they going to face some pressure at some point to increase wages for those people whom they've been working so hard?
Well, let's hope so. But as you say, with around 10% unemployment, it's hard for labor to get a lot of pricing power in this environment. So while I agree that we're probably going to see productivity grow slow, it's hard to see at the same time compensation growth really accelerate here with the amount of unemployment we have.
Michael, let's talk about what this inflation report means to the Fed. We keep hearing that the extended period is going to be more extended. As that happens, as we're longer and longer and longer into the extended period, does the CPI report become that much more important to the Fed policymakers?
I mean, I think CPI has always been central to the extended period and to the Fed's policy more generally. You know, we've seen the CPI numbers break lower probably in January of this year, and since then we've had about 4 consecutive very soft core CPI numbers. And I think each additional CPI report probably adds to the perception that this isn't just a statistical fluke, but a shift down.